in 2026, I'm looking to buy. That's my goal. I'm hoping to buy. I'm hoping to find a good deal. I'm not going to overestimate what my rents will be. I think rents will stay level to drop over the next few years, especially if deportations increase as much as people are expecting them to, because immigrant populations are largely renters, and so that's going to open up a lot of apartments. There's going to be more competition going on for renters. It's going to be more of a renters market, I think, in 26 and probably 27. And then by the end of that, all of those people who are underwater and whose asset or whose loans are resetting and stuff, they'll be washed out of the market, right? So as rents are falling, people are not going to be building a lot of new apartments as a result. And so at the end of 27, we'll probably be adjusted mostly to where things have stabilized, and people will start building again, and then we'll build back up towards that. These are the cycles of real estate, how they work. So nothing to be fearful of, but definitely something that could be an opportunity. Prices have gone up like crazy as over the last 10 years. They've just been going up and up and up and up and up. So this is, I think, kind of a cooling off period, and you should just keep your eyes open, keep your eyes peeled for a good deal. And like I always say, make sure when you read the pro forma that you're very conservative and you're very skeptical. One other thing to keep in mind, the expenses are never going to go down. If the pro forma says that the expenses when you take over are going to be less than the expenses that they currently have, they're lying to you. They're trying to deceive you. The expenses are not going to be lower. And then in the next year after that, the expenses are going to be higher again. Okay. So you really want to be suspicious of the pro forma. Okay. Now, the best way to probably find a deal wouldn't be something that's on market, obviously. So if you can make some relationships with people and go to groups and sort of find out who's selling and what's going on in your market, then that would be ideal, because you could find probably a better deal that way than if you just look at apartments.com and Zillow and things like that. So those are usually the lesser deals, the off-market deals. If you know what you're doing and you know how to analyze a property and you know all that kind of stuff, then the off-market deal is not scary. What happens a lot of times is even on off-market deals, people overinflate the value of the property. So just because it's off-market doesn't mean that it's well priced. Okay. Doesn't mean that it's a good deal just because it's off-market deal. All right. So there's plenty of off-market deals where the seller is completely delusional and thinks that they can get, $1 million more for their property than what it's really worth. Now that's where you, as the expert investor, come in. You have to be able to take their information, their rent roll, their expenses. You have to be able to calculate that to see what kind of valuation the property should have. And you need to be able to evaluate what the seller is leaving out. Because when they give you their expenses, they're gonna leave some things out. They're not going to be completely honest and upfront with you. They're probably going to not be counting their own labor as an expense. For example, if they mow the lawn or if they do some repairs, they're not going to include that in the expenses, but that will be an expense for you. Okay, so you need to add that back in. Then they might say that the rents could go up, but then you always have to ask, well, then why aren't you raising the rents? Because you just don't want money? Of course. So just assume that what the rents they're getting now would be the rents that you would get, that the vacancy rate, put that at a reasonable vacancy rate. And, hopefully you can find a deal. And especially if you become a person who people know in real estate, in your local real estate world, as somebody who's interested in buying and you have a plan to buy in 2026, then they will come to you with deals if you make enough contacts, because it would be just, it's much easier to just deal directly with the person you know wants to buy. And so you can maybe get some deal flow that way, and you might get a little more insight that way. You could find out from the seller, you know, if their mortgage is underwater. If it's not, is it a good mortgage? Is it assumable? You know, could you take it over? And if it's a good interest rate, um, you could keep that same loan that they have at their current terms. So those are some of the things that I would recommend for 26. Um, Now Ken, he recommends a lot of the same things, I guess, but he gets into a lot more um, large overview, kind of um, little more abstract, little harder to understand. But so I'm going to comment a little bit while he's talking. But I think, you know, we should be excited about 2026 if we play our cards right. We could get ourselves into something really beneficial for us, especially if you live in a higher population area. I think that there could be a lot of good deals for people in those areas. So I would recommend you put in a lot of time this year, um, you know, making relationships with people that you know are investors in your area. See what they're hearing, what they're thinking, what they're expecting the market to do, because those investors in those local markets are the most knowledgeable people in the market. You know, if they're a real estate agent but they're not in rental real estate, they don't really know the market. It's the investors who know the market. They're the ones have the most you know, need to pay attention closely to the market, and it is their market. And so you want to make some relationships with the local people. You know, you can make and talk real estate with people that don't live in your local market, but I would recommend more so focusing on the people who do live in your market, so that you can collect really solid data that is really useful and helpful for you. Because the last thing you want to do is make a mistake in buying something that is you're not going to be able to sell, or you're going to sell at a loss when if things get tough, and you overestimated the income and now you're in a bind, and the bank is not happy, and they're forcing you to sell, and now you got to sell at a loss, and you have to eat the loss. Now you just lost $100,000. You know, like, we do not want that to happen. Okay, so that's why it's so important when you're looking at buying something, you really understand the numbers and the calculations and how that all works. And that's why I do the buy or burn videos, to try to lead and guide you guys through a lot of that stuff, so that you can become experts at reading the numbers, so that you can get into a really good deal, so that even if something bad happens and you have to sell, you're gonna sell, and you're gonna make money, you know? So that's the goal. And that's how, you know, I consider myself very conservative when I do these numbers, but I think conservative is the only way to make money long term in real estate. It's, you don't want to buy at the height, you don't want to speculate, over project, and all this kind of stuff. Yeah, maybe in a fast moving market, in Florida, in Miami, you can make some money some years by flipping them like that and taking the equity. But I don't recommend that. I'm not interested in that. For me, this is about wealth building. It's about long term. Excuse me. It's about long term wealth building. It's about establishing a lifestyle that you're wanting to establish, with financial freedom, with cash flow, with all that kind of stuff. You know, that's more of my focus. It's a much simpler, easier focus, and I think it's a lot less stressful of a focus. And so this is possible, and 26 is going to be a year where you can get started on this stuff. So I think that, um, you know, people talk about prices being so high on everything, and interest rates so high, but that's what's going to lead to our opportunity in 2026. Okay. Okay. All right. Well, now let's get started on this video here, and I'll just interject my comments